Hey, good morning, everyone. It's Coach Chris coming at you from AccuTrader.net with a quick video today. And by the way, welcome to 2025. I'm filming this on, what is today? Wednesday morning, January 1st, 2025. Thanks to all my subscribers and customers. I really appreciate it. I've got a lot of very exciting things that I'm going to be rolling out in 2025 and hope you're along for the ride. The last 2 days have been incredible trading for me. Just been killing it. On my chart is a 5-minute chart of the MNQ March 2025 contract. This is a 5-minute chart, and I'm in my one of my XFAs on Top Step X to illustrate something. And I'm going to call this this video WICKS. Because if you're like me, my first year or so of trading, I was so confused as to WICKS, how to handle them, what they are, how they behave. First of all, this is not financial advice of any kind. I am simply a trader like you, sharing what I do and some of the things that I have learned over a 30-plus year trading career in stocks, options, bonds, futures, you name it, I've pretty much traded it. And with the intent that hopefully it will save you time, trouble. I'm not going to tell you what to do, only you know what you should do and can do. Your style of trading may be completely different than mine, and that's okay. None of us should and can trade the same way. You have to develop what's right for you. How your mind works. My mind works very different than others, obviously, and sometimes good, sometimes bad. I have bad habits just like you do, and one of the important things of trading is to break those bad habits and put obstacles in the way of doing stupid things. So if that makes any sense. But let's just take a look at this. This is yesterday's action. The market was open on New Year's Eve yesterday. Like I said, this is a 5-minute chart of the MNQ. Starting at around 10 in the morning, Central Daylight Time, and going into the market close here at 5 o'clock. Just don't pay attention to this channel. I mean, you can look at it, but it's not pertinent to what I'm going to try and explain in this video. So, as I said, this is about WICKS. And one of the tough things about trading the NQ or the MNQ futures is how rapidly price can move. And one of the common things that I'll use things as a verb, I guess, that you'll notice time and again with the NQ particularly, and I believe it's due to algorithmic trading, is we will see very, very rapid price movement very quickly. And it almost seems like it happens out of the blue, and sometimes it possibly does. Obviously, during a news announcement, we know it's coming, and we can see it happening. But at other times, we don't know necessarily that it's going to happen. However, as we get more and more advanced in our trading, we know when it's likely occur. For instance, if you look at the highs here of this move, you'll notice the wicks, and the same on the bottom. You'll notice the wicks to the bottom area. Now, these wicks here at the top of a candle like this are often called liquidity grabs, because what the algo is doing is it's reached a peak, it's having problems getting any higher, and so what it will do is it will make one last ditch effort and throw all kinds of volume at it for a couple of reasons. First of all, it wants to get any stops blown that are in this area here. And it wants to, what we call it sucking up liquidity. And what that translates to me is that it's looking for energy. This is a living, breathing organism, or acts like a living, breathing organism. And what it's looking for is liquidity. That's the fuel that fires this monster, okay? When it goes up like this will give it energy not to go higher, but to do the opposite. So when it pops all those stops and does that liquidity grab, and this happens very quickly, even though this is a 5-minute chart, you'll see on the 1-minute chart these smaller candle bodies in wicks in both directions. And what that is the algo going in both directions and sucking up liquidity in both ways and then moving in a particular direction. So let's just take another look at this. So we have price coming down, bottom here, bottoms out at this point, a little liquidity grab, and then goes back in the other direction. And it will just keep oscillating like this. We will see some areas where it tends to go just sideways or appears to go sideways, which we call consolidation. And here again, it's building energy during this time for either a move up or a move down. And we don't necessarily know that at the time, but we do our best to predict it or just avoid trading during those times. But what I wanted to show you here is how this can affect you. So say you're trading this in either direction. Okay, let's just say you know that a doji candle, and we know a doji candle is a small-bodied candle, right? So price has been going up. It's approaching this orange line right here, which in this case is part of the opening range. So we know that's an area of possible resistance because look what happened here. See how when it hit that orange line, it consolidated like this. So price is coming up, and we know as it's approaching that orange line, it's likely to make a reverse. So you see this doji candle, which is a sign of indecision or a change of direction. So we get short here, okay? Now, how far off do we put our stops? Well, typically in the MNQ, it's going to be 10 to 15 points, usually somewhere in that neighborhood. Well, look what happens. So if you're an average trader, you get in short here, okay? And let's just measure this once if I can get my ruler tool here. We get in short here, and look on that first candle, what it does. Boom, liquidity grab. And even if you had a 20-point stop, which a lot of traders do, look what they do to you. Boom, 24 points instantly, and you're stopped off. If you've got a mini, that's what is that? $480 you just lost. Micro, you just lost $50. Not the end of the world, but most people who trade micros obviously do multiple. Okay, so that's one of the ways they get you with these wicks. Okay, now a wick isn't always necessarily true price movement because the other thing this can be is a fake out. So as this is building, this candle body will actually go up here. And so you say, well, it's a continuation. It's keeping on going. I'm going to stay in a trade, and boom, all of a sudden they go the opposite way on you. So now we come down, and you'll notice what happens. We get a big bar here, but look at the wick on this next candle right here. Okay, so what it does is it comes down and it retraces almost 3/4 of the way up this previous bar up to right here. Let me just measure that out, and that is another 20+ point reversal. So here again, remember, most people are putting their stops at 10, 15, or 20 points, and so now they've just run your stop, another $400 or $500 loss, and boom, then they bring it back down. And notice even here on this doji candle, they did the same thing. They ran it up. What is that? Yep, 20 points again. So see what they're doing here? So what this means for us as traders is if we are trading the NQ or the MNQ, we have to make sure, even in these trending moves, that we leave enough distance on these stops to not get stopped out, but yet maintain our profits. And so it's kind of a delicate balance that we have to walk. And it can be very tricky at times. But what what it shows is on these trending days, you can't really just put a 5-point stop, or you're going to be consistently getting stopped out. And eventually what's going to happen is, even with a 5-point stop, you're losing $100 on a mini. That's going to add up. It may only take 2 or 3 times, but it will erase any profits that you may have made, which obviously is the important thing. So here again, you can see, look at this wick, okay? And it happens over and over again. And so it doesn't always happen just in the one direction. Here, look at. So look at here. It wicked all the way up to here. Let me just measure this just to give you an idea of the scale of this. From that point there, all the way down here, that's a 65-point move. Yet the candle bodies, wait, I missed that. I didn't go all the way down. I'm going to go way down to here. 80 points, okay? With over half of it, let me just measure the candle bodies. 30. So we have 80 points of movement, right? 50 of which is wicks. 25 to the top and 25 to the bottom. And so you can see how this can be very tricky. Now, I know I'm isolating that one little area there, but it happens again and again. Look at here. So we go from this wick all the way down to here ultimately, which is a huge move. So let's just take the swing high and we go down to there. That's 125 points with 100, probably close to 40 to 50 of that being wicks easily. So one of the things that you really need to do as your trading career evolves is learn how to deal with these wicks, especially in areas here where we know that they're likely to happen. The internal, this is the swing high because it's a point of move of a higher high, and so. But we get these within that higher and lower range. We get these internal movements up and down. And even then, we get the same characteristics and behavior of these liquidity grabs at the high points. And so you want to be very cautious on how you're trading, how you set your stops and take profits, especially like here's an upward trend. Within here, you don't want to get blown out of a nice trade simply by getting wicked out. It's very frustrating, causes a lot of FOMO. And so I'll talk about this more in specific techniques you can use to avert them, but just please be aware of them if you're trading the NQ, because one of the questions I often get is, well, Chris, how close do you set your stops? And I say, well, first of all, when you enter into a trade, you have to know your risk tolerances, what your account can handle. If you're trading a live account, that's real money. And I do trade a live account a lot. So, can your live account sustain a $500 stop out? Can you recover from that? Or is it going to just put you on tilt? If it's in a prop account, it isn't necessarily real money. It can be in many cases, but do you want to blow an account over a wick? So you have to know going in, and also what is the drawdown and things like that. So, you always have to be careful with it. This NQ can move so fast, and you always have to be on your toes. So I hope that makes some sense. I know I rambled quite a bit, but just keep it in mind. Continue to watch my videos for some future techniques on specifically when to watch for them, how to trade around them. So consider this part 1 of WICKS when trading the NQ or NQ. So have a great 2025, everyone. Thanks again, and I will see you soon. Coach Chris out.